you so much, panelist. I will have a few questions for each of you. Then we will give the floor to our audience. Ms. Dagmawit, how do you see the potential of capital market in involving MSMEs and similar actors? And on the same token, what was your support as a financial innovative lab during the establishment of the capital market and so on?
Thank you. So I came from the Innovative Finance Lab, which is a joint initiative by the National Bank of Ethiopia, the Ethiopian capital market, as well as UNDP, Ethiopia. So the main purpose was, UNDP was involved initially with supporting entrepreneurs through Entrepreneurship Development Institute. So with that 10-year support, we have learned that access to finance remains to be the major challenge for SMEs and startups. So when National Bank requested UNDP to help establish the capital market, we saw that as an opportunity to finance SMEs. And how we say that is, within the capital market, there are two major markets. One, which is run by now the Ethiopian Securities Exchange, which is the public market. And then the other aspect, which is the major part for us, is the private capital market. So within the private capital market, you can finance early stage companies. You can have broad market opportunities for SMEs and startups through venture capital firms, through private equity funds, and the like. And so we saw that as a major opportunity to finance SMEs and startups, and that is what we're helping build and establish.
Good, thank you. Let me come to Dr. Tilahun. I have a couple of questions for you. The very short question that I have is, when is really the operation starts, ASX? Because we have been told so many timelines, and this audience wants to know exactly when we are going to have ASX transact the first transactions. Along with that, how do you see the potential of the Ethiopian market having large populations, or the second in Africa in terms of populations? How you see that from the perspective of boosting investments and the like? And the other one is, there are a number of projections, numbers that have been formed by different entities, including your esteemed company. One of the papers that I read a few weeks back by a kind of consulting firm referring the Fitch report, it says that by 2027, the ASX bond market will reach 4 trillion birr, and security market 3.4 trillion. This is in terms of dollar. Even with the highest currency, it will be around $75 billion just after 2 years or 3 years down the road. Do you see these numbers are achievable? And what are the main indicators or favorable situations to reach this number just after 2 or 3 years? 2027 means 2 or 3 years. And maybe together with that, will the, one of the capital market, the advantage of capital market is to mitigate risks, especially managing hedge funds. And for that, derivative markets is quite relevant. Do you see derivative markets will come into picture just after some time of you start your operations? Thank you.
Thank you, Melaku. Good afternoon, everyone. I'm glad you stuck around a bit. And again, thank you for the organizers. To really be blunt on the first question, aim is to launch it this year, European calendar. Hopefully, sometime around October. But I think down the line, I've been very clear on this issue. The only thing that is determining our launching the timeline is the technology deployment. And unfortunately, we're trying to procure our system through a World Bank process that is not promising to be very efficient. But I think by next week, we will announce our vendor. And here forward, we will need around at least 5 to 6 months to go through testing, quality assurance, and etc. I think so. We'll be very clear about it. And I think the other perhaps key factor would be the speed with which Melaku, you guys would acquire broker licenses and come join the market. Without it, it's pointless to have a well-capitalized exchange, well-run system, but then we have to wait for you to come up to speed. So that training, UAT, etc., has to happen alongside the service provider. So that's a key timeline. I think in terms of our market cap and the expectation for the exchange, Ato Melaku is telling you two different numbers. As our esteemed investor and shareholder in the exchange, he has our information memorandum, perhaps before anyone else. And we've been very clear in terms of the huge potential, but also the learning curve that this market has to go through. So aim is, say, within the next 10 years to list up to 90 companies. Mix of SMEs, large cap, SOEs, financial sector, non-financial sector. So you can already figure out what kind of market capitalization you will have in the equity market. And you can actually take an informed guess about what could be potentially that market cap, right? So the average paid up capital of banks in Ethiopia is about, say, 5 billion. If that would increase by 20%, 30%, based on investor participation and perhaps participation of foreign investors. So I think the valuation of those companies would be enhanced. So your equity market is determined by both issuers and investors. So you can't aim to list 200 companies, even if we want to, and as long as there is no demand. So it's a balance of these two factors. So so those numbers that you've heard from, I don't know the source of, but I think our expectation is more or less to say, Frank will correct me, if we can reach around 10 bill in the next 10 years, 16 billion, we would be good, right? We would be like, so if we actually make it to where Kenya is today in the next 10 years, that would be the target. And that would put us on the top 10 exchanges already. Obviously, you've heard from government, we expect to bring up to 10 companies from SOEs. That privatization would be a big boost for our exchange. And if we actually get the big companies, we could be performing better than some of our East African partners. The same thing is for debt side. If I'm not mistaken, I think last year there was about 200 billion birr worth of treasury bill issuance. So whether or not you dissect that to bond, treasury bill, other instruments, our sovereign issuance practices have already been predictable. So you will never reach whatever, $34 billion, something like that. So you can already determine what's the source of government revenue, source of finance for government, and how much the type of instruments you already have, and then what would be the growth trend in that space. So that's also, to be honest, very much clear. Again, our expectation is, yes, our debt market will grow, but it's starting from a very, what you call, shallow ground. It's, the instruments are not marketable, so that's why we wanted to do repo, that's why we wanted to do market for treasury bills, then develop that towards a short-term, medium-term debt instrument. So there will be gradual growth, but huge, huge potential. Like I said, just ask Frank, what's the size of the Kenyan debt market? And our economy is probably twice the size in terms of the role of government in the economy. So there will be huge demand from government to raise local finance. And I think in that regard, we're very much optimistic. So that's it in terms of the size of the market. Risk, yes, if you don't understand capital markets very well and you don't understand products, you already have a lot of risk to manage compared to products that we already understand. So the idea would be to start from plain vanilla products and grow to the more risky products. So derivatives, I wouldn't, at least in our strategy, we haven't anticipated a proper derivatives market or a platform before the first 7 years. So post 7 years, 5 to 7 years, we'll think about it. But the idea is, again, this is also predictable for investors. Who is the issuer and who is interested in investing in those instruments? Somebody is trying to hedge risk in the debt market, equity market, and that's the only way your derivatives market can thrive. So I think it took NAC about 50 years to be where they are in terms of issuing the, correct me, Frank, I don't know when NAC's derivatives market started, but I think if we're counting 70, I think it's been a while. So it takes a while until the demand for those securities exist. But other than that, there is risk everywhere on the financial markets. I think you mentioned about volatility from rules, operations, market education. There is a need to manage market volatility. And I think sometimes we kind of make this conversation about volatility very complex, but it happens every day. And I think it's in human nature to speculate. So, my good old Toyota used to, cost this much last year, and then maybe the price of that Toyota, where I somehow used as a depositor of value for my money, price changes. Same thing for real estate. So I think it's going to be the same for the securities market. So even on a plain vanilla instrument, speculation and volatility is a risk, and that you have to manage. Some of it is done through the exchange. So obviously, we'll have circuit breakers, so we will somehow maintain price stability through our rules, but also in terms of primary issuance and perhaps primarily retail investor participation, there needs to be a lot of education going on in terms of informing investors on what their expectation should be vis-a-vis the securities market. You mentioned about population, I'll stop with that. I think the size of our economy, population, is both an asset, but you shouldn't rely too much on the potential of retail investors too. So you really have to work on it, but you have to understand how capital markets actually work in many markets, is to have as a strong institutional investor base as possible. Retail investors complement that process most of the time. Frank will tell you what's the size of the retail investor participation in Kenya, at least the direct one. But here is I think for the catch for us, also because we do not have an option, we want to bring up to 4 million Ethiopians into the capital market space, sometimes directly, sometimes it could be indirect. I think the conversation we had just before this one about CIS is exactly that, right? You cannot have 4 million investors directly buying and selling securities, but these 4 million investors can put in investment funds, money in investment funds, and from there the investment funds can participate in the capital markets. If you see the size and growth of the Kenyan investment fund industry, unit trust industry, you'll be surprised. So the idea would be for us to capitalize on existing practices, to lay down the basis for our institutional investor base. If any bank in Ethiopia creates an investment account on its mobile application, if Safaricom and Telebird does the same, and anytime we're spending money to buy lunch, there is an automatic mandate for that particular platform also to save a percentage point, half a percentage point, to that investment account. That would already give you a large base for small investments and small contributions into those instruments. So I think that's why I say, look, if we were 5 years ago, we were discussing this issue where the fintechs are not there, the wallets are not there, it would have been very difficult to say, oh, we will reach this many population. But I think today we're in that opportune environment to say, okay, look, the opportunity is there, but we have to work for it. Thanks.
So before going to Mr. Frank, as a first CEO of Ethiopian Exchange, what are the key concerns and aspirations that you have for the exchange?
Good. For now, it seems to be launching it, but I think as a founding team, we've realized, we're fortunate enough to have, all the support that we need. And perhaps our role, other than to be in the ivory tower and always, talk about these things, but the role of a founding team is to kind of project where this market should go and actually work on assignments that you would only see results 2, 3, 5 years down the line. And I think I'm going to connect it with what Dagmawit was saying. There needs to be a realization that exchanges are not the most profitable businesses in the world, right? And many exchanges struggle in terms of building listing pipeline, developing products, So primarily, I think it's to understand your main responsibility. The exchange's main responsibility is not to be a mere technology platform or look like a data-driven, fancy techie entity. The role of exchanges is to promote products. And it's products that function as magnets. They connect issuers with investors, right? So our role is to, and I think you'll see it in our strategy, we look like a kid in a big toy store. We wanted to do everything, primarily because we've realized that as an exchange, as a new exchange, you have to diversify your products and services. You cannot simply rely on equity. So that's why our debt market has perhaps end-to-end products and services. We wanted to do a receivables discounting platform for SMEs to come into market and discount their receivables. We wanted to do equity crowdfunding, regulated equity crowdfunding. So the aspirations is to be a multifaceted financial infrastructure. You cannot avoid to be one. And also the work then in terms of the assignment for our exchange team is to lay the foundations for those products. I'm sure you heard us a couple of times saying, look, we need to have ETFs in the market. We need to have sukuks in the market. The idea is to understand where there is an idle and perhaps utilized source of fund, where there is potential for companies to raise funds, and is to connect these two. So I think the aspiration would be to have as many products as possible in the exchange and have, obviously, the liquidity that is required of those instruments in markets. Thanks.
Thank you. Thank you. Mr. Frank? NSX is a 60-year-old company. And can you share us what is the current market capitalization that you have both on debt market and equity market? And do you think this number is something that you deserve for looking the number of years that you pass through? And the other is, what are the experiences that you can share us to the new companies that we are forming in this country, the Ethiopian exchanges?
Thank you. Maybe the first place to start is to first mention that contrary to the introduction when you started and said we are competitors, I don't think we're competitors. Actually, we are partners. And to confirm that, Tilahun and his team, we had dinner with the ESX team last night, and we actually confirmed we're going to work together. So we are not competitors. And I'm happy to explore a bit more in the course of this panel why it is actually in the interest of the Nairobi Securities Exchange for the ESX to be a success. There is resounding reasons why we would want our brothers and sisters here to succeed and succeed fairly quickly. It actually does help not just Kenya, but the East African region. But let me talk a bit about the NSE in the context of the question you've asked me. We are 70 years old, so that has a long history. Started off in 1954, demutualized around 2015, and then subsequently listed ourselves on our own exchange. So it's good to point out that we ourselves are listed in our own exchange. So we are a publicly listed company with shareholders, both retail as well as institutional. Our capitalization is around $47 billion, of which about that $14 billion is equities, and $33 billion is fixed income. So that is not to say we think that's where we should be. To answer your question, we think we should be way, way, way larger than that, and we are working very hard to make that happen. I think the other thing that is worth mentioning about the NSE is on the equity side, we have about 61 or so listings. That includes funds like ETFs and REITs, which my good friend here is an authority on. And of course, we have both foreign as well as local investors participating in our exchange. The bulk of those are foreign. We would want at one point to be about 50-50. I think if you heard from our chair yesterday morning, he did mention that part of what we want to do is to have a at least 50-50 balance between foreign investors and local investors. And at the moment, it's about 60% foreign, 40% local, of which of the 40% that are local, the bulk of them are institutional, like pension funds and the like. And so our retail, local retail investors are about just shy of 10%, somewhere around there. So we have a lot of work to do to actually increase our retail participation. And in fact, I think one of the reasons we are here is we would want to share the experiences we've had in the hope that the ESX does a better job of mobilizing the retail segment. In fact, I think Ethiopia will probably be the real showcase of how to actually go about getting retail investors to be the primary constituents and participants in the exchange. On top of that, we have a variety of products that are available on our exchange. So other than equities and the fixed income, in the fixed income space, it's both government paper as well as corporate bonds. But we also have derivatives. We have funds, so I mentioned ETFs, REITs, and the like. And of course, we also have Sukuk. And we are happy that we've done that. I can talk a bit more in the course of this on some of the other thoughts we've had around products. For example, you might be aware that we listed the first ever green bond in Africa, the Acorn Green Bond. We've also, a while back, we launched something called Emakiba, which is Africa's first mobile transacted government bond infrastructure. And I think the key point is that we are in the process of figuring out many other products that we can bring to market, and we can talk a bit more about that. Having said that, and I should also mention that we also have, other than the main board, we have the unquoted securities platform. So this is for trading unquoted securities, and that's also doing quite well. But the point I think to make is that the long history, the 70 years of our existence, in my view, I think there is a lot more we could have accomplished in that period. There are some mistakes we've done. We are going to share that with our brother here so that hope you don't make the same mistakes. And also, more importantly, I think we are also here to learn. There are initiatives we are seeing in the Ethiopian landscape that we would want to take home and also see whether we can implement. And then more importantly, also see how we can work a lot more closely. From a knowledge sharing point, I think the first thing to say is you really, really do need a strong and robust ecosystem to actually make an exchange work. It's one thing to push DOC here to launch the exchange, and of course the Capital Markets Authority to do what it's doing, but it's a whole another business to actually get a functioning ecosystem that supports the ESX here. And that means that a lot of effort needs to be done in Ethiopia to get the ecosystem, whether we are talking investment bank, custodians, fund managers, and all the other ones that my good friend Rina mentioned in our presentation, to actually come to the market, be able to actually support the exchange, because that is actually how it works. That's number one, the ecosystem. The second thing, which is we usually forget, is investor education. It really, and it's a lot of heavy lifting to actually get, whether it's retail investors or in fact even institutional investors, to understand the market and come to market. If we, after 70 years, are still struggling with it, I can only imagine how much heavy lifting Ethiopia will have to do to get investor education up and running, And then the third thing, which I think is also important, is to really work closely with your regulators. To be fair, regulators have a strong role to, of course, shepherd the market, especially a new market, but they can also stifle it if the right balance is not there. And I think it therefore means, for example, Hannah, who was here in the previous session, a lot of the things she's mentioning, for example, very relevant. The question is, how do you collaborate with the CMA to actually ensure that you strike a good balance between the need for serious regulation and the need to allow room for innovation? whether that's through the sandbox process or consultation or any other collaborative co-development of programs. But in my view, I think it will come down to investor education, and it will come down to how you actually work together to develop the ecosystem. The NSC is here to be a partner, and more importantly, to also share our own understanding, our own capacity, and our own experiences. That way you grow. Later, I am happy to talk about why really we need the ESX to be a success. Thank you.
Good. Just before going, when you are talking about the fixed income market, you mentioned the government papers. Are you referring the government treasury bonds that you are trading?
Yes, so the large chunk of fixed income in our market, actually it's globally, it will usually be government bonds, treasury bonds and treasury bills. Okay, they tend to be a lot more liquid, and of course, of a lot of interest, both from retail, local institutions, and foreign investors. So yes, I'm talking about primarily T-bills and T-bonds. In Kenya, we've had also infrastructure bonds, which are very well received. And of course, there are other ideas around that. So for example, can the government bring dollar-denominated treasury bonds in the market rather than our local currency-denominated ones? Currently, most governments, including ours, issue euro bonds outside the market, which a lot of times our own people are not able to access, and then they would love to invest in dollar-denominated instruments. So again, the conversation is to move not just from the traditional treasury bonds, treasury bills, infrastructure bonds, but now to also start thinking about, can we talk about FX-denominated government paper? Thank you.
Good, thank you. Dr. Tilahun, is it possible in our cases where you can do government treasury bond on a primary market level? Because the recent data that I have seen from FSR is that even from banks, around 65 billion worth of treasury bond have been purchased. And I thought you can involve only on the secondary market side rather than on the primary market. That's why I'm asking our friend from the Kenya. But Dr. Tilahun, is it doable in our cases to involve on primary market?
So just to clarify, so the government paper is traded on the quoted market, the listed market, the public market rather. The USP, the unquoted securities platform, is purely for private players, not government paper.
So maybe if I understand the question correctly, so the distinction between primary and secondary market for government instruments. So primary market will continue the way it is. Central bank as
by the central bank.
As agent of the government will issue the instruments. Banks will participate, pension funds participate, potentially retail investors could participate directly, but most likely retail, pension funds, and other participants want secondary market, because as a bank, once you've acquired a treasury bill, there is no way to actually offload the instruments to other investors. Normally, banks and these types of institutions do not participate in the primary market to hold on those instruments. Unfortunately, that's the case in Ethiopia right now. So that's why the base is not expanding. In fact, we have had a good experience 2020 to 2022, 23, where banks' participation has been increasing, but not as much recently. So the idea is to actually allow them to have a secondary market where at least a substantial amount of that size goes to retail investor. If you are a retail investor today, technically we are allowed to purchase treasury bills, but you cannot access the central bank directly. You actually literally have to go to a commercial bank. I think minimum 5,000. But that's a very inefficient process, right, currently. Down the line, I think when we launch, whenever Hibret Bank or another bank participates in the primary market, the intention would be, okay, I'll keep 50% with me, but the other 50% I'll retail it through our mobile application to many, many more retail investors. It's the same thing for our equity market. Today, Ethiopians, about 400,000 of them, primarily in the financial sector, buy shares in the primary market only to hold them forever. And because of that, because of lack of liquidity, you're not getting as many investors into the system, or at least in terms of size, it's very, very, very much limited. So that's how primary markets and secondary markets complement. That's how, especially institutional investors in the first place, participate in the primary market, because using their capital, they're trying to make money out of the process, right? That's the nature of primary markets in the rest of the world. You don't expect significant retail participation on the primary offering of securities in most mature markets. I'm sure this is the same in Kenya. Primarily, banks, pension funds, institutional investors participate in the primary market. Then on listing day, the majority of the retail investor participate. So, to be honest, I think we wanted initially for central bank to actually, conduct its primary offering on the trading system, because it's very much possible. But you've heard about the CSD this morning. The CSD's primary function is one, at least for central bank, to allow central bank to issue securities through auctions on the CSD and then hold them as custody. So there is a function already created for it. Thank you.
Thank you. Mr. Kenneth, as a chairman of the Association for REITs, can you brief us how the real estate investment trust is working in the capital market? Because the reason is in Ethiopia, there are quite a large number of real estate developments. The only instrument that we have is a debt financing that they are getting from bankers. At times there is a shortage of or liquidity challenges and so on. Definitely they will be stranded. Do you think such products that are involved on the capital market will solve and tell us the whole mechanics that is working there?
Thank you very much. Good evening, ladies and gentlemen. It's a pleasure to be here. I think before I answer the question, I'll be remiss if I don't thank Hannah for making my work very easy. So basically what happened in Kenya is the Capital Market Authority in 2013 released what were called the REIT regulations. And what these regulations did is they defined, number one, the REITs and the type of REITs you can have in Kenya. They also defined the players within the REIT ecosystems, and also the role and responsibility of each of those players. And the whole aim of the regulations was to bring that transparency and security for investors. So basically in Kenya, you can have three types of REITs. You can have an income REIT, which by the name as denoted can only participate in purchasing income-earning properties with registered leases. So they do not perform any development function or any of the like. That was felt would be a more acceptable product for especially retail investors, people who are not very well informed into the nuances that go on into property investment. The second one, and this is a worldwide first, we've got development REITs. As the name denotes, a development REIT actually undertakes development in all the various sectors that are there. It can be residential, commercial real estate, hospitality, infrastructure, you name it, right? And they do development. Then finally, you've got Sharia compliant REITs, which is the name just also states is they're Sharia compliant. So if you remember Hannah's pictorial on what a collective investment scheme should look like, then the REIT will be the common law trust body that will be orange in the middle of that pictorial. In Kenya, it's a common law trust. In some jurisdictions like the United States, it's a company. On top of that, you have the investors who come together, retail, institutionals, to put in the money into the REIT. The REIT then acquires the properties that are income generating or buys greenfields or brownfields for development if they're a development REIT. Now, the only additions, and now that we're going into the nitty-gritty of it, is that to the left and right of the trust itself, on the right, you'd have a trustee. Now, the trustee has a fiduciary duty to the unit holders, so they actually own and hold the assets that belong to the REIT. In the experience in Kenya, most of these trustees are banks because there's a custodial function involved in that. On the opposite side, you've got a manager or the promoter of the REIT, and these are the people who tend to have brought the REIT into fruition. The manager will undertake the day-to-day functions of running the REIT. This is ensuring that the properties are properly tenanted, they are managed, they are valued, they're insured. If you are a development REIT, this will probably be more like your project manager who ensures that you're undertaking the development to the specification for which you raised the funds. You are on track both in terms of time and costs. So that is how the REIT performs. Now, once a REIT is fully capitalized, the REIT, number one, must be as a REIT registered by the CMA. The trustee also must be registered by the CMA, and so is the manager. So CMA has an overarching role of regulation of everybody in the ecosystems. By their nature, REITs perform well out of size, and the only way to achieve that size is constant fundraising. So one of the ways they achieve the fundraising is being listed on a stock exchange, and that enables them to raise suitable, adequate, and capital that meets their targets, obviously at an applicable interest rate. You tend to find, like I think we find in Kenya, is you have a very big mismatch between what the banks are charging as interest for loans and the yields that you're getting for property. So you find coming to the capital markets is a much fairer way of raising capital. So in a nutshell, that's what happens. So with the experience in NSC, a lot of REITs prefer to trade on NAV. Now the NAV for a REIT is basically all the total assets less the borrowing, and that's NAV. And so the 4 REITs that we've got are trading on the unquoted securities exchange on a net asset value basis. Thank you.
Thank you, Mr. Ken. Just for the interest of time, let me give the chance to the audience to give questions to any of them. And yes, over there. 2 over there. 1 here. 1 over there.
Thank you for giving the chance. My name is Melaku from Addis Ababa University. I am also the vice chair of Brand Insurance Company. So my question goes to Dr. Tilahun. I would be also very happy to see or to hear the Kenyan experience. What is your preparation for the technology to support the security exchange? And who should implement the technology? The brokers, the banks, or you? For example, to allow anyone, a farmer, just having his cell phone at hand to buy a stock, if need be also to sell it the same way. Actually, it should be possible also. The technology could make it possible for anyone in the world to buy and sell shares. So the question is not only the technology here, but are you going to allow foreigners to buy and sell shares? Particularly the diaspora will be interested. Small investors will be interested here. But how do you distinguish the small and the big fish here? Given this, with the introduction of the capital market, stock traders will come. They want to just buy and sell and make their money, like any other stock exchange in New York, Tokyo, London, or in Nairobi. So, but currently stocks are considered in our country like a fixed asset, like a car or a house. And if you want to sell your house, you'll have a lot of paperwork which may take days actually. So for a stock trader, hours will matter actually. So are you going to change this? Another point is, how are you going to manage the fake news? Fake news could raise the stock price dramatically or decrease it also dramatically. And there are a lot of fake news in this country going on where people also die. Are you prepared for that? Thank you.
Thank you. Over there, at the back.
Thank you. I am Ayala again. So my question will go to Mr. Kenneth from Nairobi Security Exchange. I can put it this way. The Nairobi Security Exchange has been, if I'm not mistaken, around over 70 years. Yet only has around 61 listed companies, despite being one of the most liquid markets in Africa. Maybe based on liquidity, it is ranked maybe third or fourth. And here in Ethiopia, in comparison, the general Ethiopian capital market ecosystem seems to be, as to my opinion, experiencing a surge of optimism. The way I see it, there is unsustainable optimism in the ecosystem. So my question to you would be, what factors have contributed to the relatively low number of listings on the NSE? And the second question would be, given this, what advice would you offer to participants in the Ethiopian market to ensure sustainable growth and avoid similar pitfalls? Thank you.
Thank you. Yusuf, over there.
All right, thank you. Good afternoon, everyone. My name is Opsitu Sufyan. I'm from the UNDP. My question is for Ms. Dagmawit. So you mentioned earlier how the project seeks to help MSMEs and startups, and then you mentioned that there's a linkage that can be made with the private capital market as well. So how do you build these enterprises who have had to rely on traditional debt financing from banks? So how do we change the rationale and then prepare them to the capital market? And what are the other investment opportunities that they can expect in the period leading up to them being sufficient enough, advanced enough in order to list? Thank you.
Thank you.
The panelist, my name is Kadir from Ramia Bank. My question will go to Dr. Tilahun. Just what is your readiness to introduce this Sharia compliant securities? As we know, it's like evolving in the world, and in the country, investors and the issuer are waiting to have invested on Sharia compliant matters. The introduction of these securities, as you said, it will be introduced on October or September. From the inception, is it incorporated these Sharia compliant securities? Thank you.
Thank you. Let's discuss on this. I think many of the questions comes to Dr. Tilahun. You can start with it.
Thank you. I think the first question is about technology. So I think although technology is very, very important for the exchange, at least from where we stand, it's not the most perhaps difficult headache that we have. Early on, we made that assessment. It's been a while since we've been established as a project office, by the way. So for a year and a half, we acquired a foreign technology advisor, went through many lessons in other markets, including NAC a couple of times. And obviously Johannesburg, Ghana, Nigeria, Europe to Asia to what you learn is obviously there has been a lot of fragmentation across most markets in terms of the technology stack that they have, because they've been learning to acquire technology from time to time. And I think some exchanges have 3-4 different vendors for 3 or 4 different products. So it's good to be where we are today. Technology providers are now, they have many vendors. It's competitive. It's affordable. You can ask David here in front of me. He's from NAC point of view, he has been through many. So we've decided initially not to actually build our system here, but rather went to acquisition. And technically, we would have an equity market, a simple matching engine for the equity market. We want to do debt market in a form of what you call an OTC exchange. So that means we want RFQ. So we want Twasfa to negotiate with Melaku in terms of their price for a particular bond. So usually this is very much bank-driven market in most cases. So we have an RFQ system. So basically this is what we need, but we've added a few features. We want to have an auction platform here and there. So I think from where we stand, we're prepared. We've seen at least enough for now in terms of our demand. In addition to that, I think that's where you reflected how can retail investors access our market. So naturally, our trading system is a standalone system. Only members can access it. But then we wanted as many retail participants as possible into the market. And the only way to do that is to actually allow your members, which are the brokers, to have a capable, what we call broker back office system or order management system. So I, as a retail investor, would access that order management system. And after depositing funds or making sure that I have the securities in the broker's account, that order management system will allow me to directly go to the trading system. This process is obviously seamless. You don't see whether or not there is cross-check or pre-confirmation happening vis-a-vis the trading, the broker back office system. But there would be sort of a pre-confirmation check from the broker's point of view. And for all liabilities and risk purposes, the exchange will make sure it's the broker, the member that is accountable. And the member is usually connected to the CSD. Our trading system is also connected to the CSD. So we're trying to shoulder that burden for the members so that onboarding into the market would be easy. And I think that's a lesson that we've learned from Kenya. I think in NSE bought a shared broker back office system for the market, and I think Angola did it. I think it's only these two markets that have tried this approach in Africa, and it's a good lesson. It actually minimizes costs for the market. I think down the line they can pay the maintenance fees and etc. But initial acquisition could be done by the exchange. And of course, brokers are free to acquire their own system as long as they fulfill our minimum operational requirements. In terms of foreign investors, yes, I think in this kind of context, you don't usually see foreign retail investors participating in capital markets. I think maybe Frank, you can correct me. Usually what you're looking at is foreign institutional investors. There will be custody chain. So a foreign custodian would have to connect to a regional custodian or maybe a custodian in Kenya, that custodian to a local broker. Usually you're expecting serious institutional investors that are analyzing a market, analyzing a product, and giving mandates to local custodian. So that regime is open. I think it can work in Ethiopia with the Investment Commission and ECMA. We're trying to fix the nitty-gritties in terms of the regulatory space. But at the end, key question would be, can we assure them they have the convertibility in terms of FX and etc. I think that's something that we are working on as well for short to long term. I think in the long run, it's about fixing your FX regime. Retail investors, if we're talking about Ethiopian diaspora, I think it's much easier. Ethiopian diaspora are treated as Ethiopians. They have already experienced investing, especially in the financial sector. They would simply communicate with their local broker, deposit funds, USD primarily, right? The way how it's working right now, and it would be the broker that would service them. If the broker would choose to actually provide them services through their mobile application or web-end platform, that's good. If not, usually it's a text away to your broker or an email or a phone call away to your broker to make those decisions. So we're hoping on a lot of diaspora participation, to be honest. So that's the traders. I think lead time, transaction time for securities market has now more or less have standardized. So depending on what the securities you will see. So debt side, it's usually T+1 now. You can do T+0. The technology infrastructure allows you to do anything you want. What you have to take care of is, especially if you're trying to attract foreign investors, can they be able to make decisions on those investments within a T+1, T+0 environment. So equities, at least in Africa, is most likely T+3. We're hoping, at least depending on your comment, especially the institutional investors here, to do T+2, but I think debt side it would be T+1 for your conventional securities. Repo would be T+0, so you should be able to settle the same day after transaction. Fake news information, yes, a big risk. So I'm not going to give you a technical response that this is going to be managed and handled. But I think the general approach has been for almost all markets is to manage, misinformation. The only solution is to communicate the right information as quickly as possible, right? So that's what the authority does, that's what we do. Issuer information, material information, financial reports, prospectuses should always be accessible as quickly as possible. So if you are concerned about a certain information, a certain material information coming out of a particular company, first thing to do would be check the ECMA's website, check ESX's website, and check your broker. Because as a mandate, all issuers are required to disclose and communicate material information as quickly as possible and as immediately as possible. So the idea would be to generate as much information, genuine information as possible out of the entities and then make that available and accessible. But other than that, yes, there is going to be a lot of misinformation that you have to manage. And I think the authority would be in a better place to share with you the legal and the regulatory approach, right? So you have to, of course, enforce those which are releasing misinformation into the market. And that's our shared obligation in terms of surveillance, market supervision, and enforcement in that regard. But Frank could say a few more if he's also facing few challenges on this space. Thank you. Maybe, sorry, I might as well address the Sharia question.
The definition of stocks against legal frameworks that you mentioned.
Come again?
The way the stock is defined and against the existing legal frameworks. That was one of the questions raised.
Okay, maybe I did not capture that question very well. So I'm assuming you were talking about shares. So we'll have primary offering. Companies bring those securities to trading. That typically is what you call listing. Vis-a-vis the existing legal framework, we call them shares, depending on how the company is classified, depending on who is the issuer. I think we don't have any gap and perhaps challenge in that space, but maybe I'll hear from the question again and maybe clarify. On the non-interest banking, Sharia compliant securities. So like I said, I think from the exchange point of view, we're selfish, right? So we want products as quickly as possible into the market. We want trading on those securities as quickly as possible. I think what we lack right now, and the regulatory framework is there, when we acquire technology, David will laugh at me, but we have asked technology providers to actually, whether or not they have figured out any unique needs for Sharia compliant instruments. Until now, there isn't really customizable unique need, but we've checked enough. And I think so in terms of technology stack, our rules, they are already accommodating. And so what we need now is for issuers to come up with the first sukuk, issuers to come up with the first Sharia compliant equity. Without that, I think we can't even test whether or not what we have is fitting. So that's the key issue is now, help government to structure the way it raises debt finance from the market, both in terms of the conventional, but also sukuk type of instruments. And the same thing for companies. So we want a bank to try to raise sukuk finance and maybe see if it can easily, quickly, and cheaply raise that funding so that it can actually, again, invest it. So I think the key question around Islamic instruments today is about where are the issuers, what kind of support do you need from us, and yeah, I think the rest is really, really manageable. Thank you.
Thank you. Mr. From?
Yeah, I would, first of all, I agree with the points Doc has put in place. I think the two comments I would make. The first one is really, rarely will you find anywhere in the market where you have retail investors getting direct market access to trade directly in the exchange. In fact, even institutional players typically won't. However, in more advanced economies, you will have institutions that will be given DMA, direct market access, but then in that case, you're talking about very, very very large institutions. And in a lot of times, you're not actually even trading. It's actually an algorithm trading against another algorithm. It's high frequency trading and things like this. We're not there yet. Nowhere in Africa are we there. And the large exchanges we have here, Kenya, Nigeria, Egypt, Morocco, South Africa, look, we're not there yet. If anything, to my earlier point, forget about giving people direct market access to the exchange. You have a lot of investor education to do in the first place, so I think you walk before you run. However, technology has a huge role to play to enable, accessibility and things like this, so that people are. Once they understand what the opportunity is, the ability to buy and trade very easily on the click of a mouse or a tap on a phone is really what it's about. However, the gatekeeper is you have to have solid technology for sure, and you also have to have serious, well-regulated ecosystem players. The stockbrokers that are in place, the custodians, etc. I think the other thing to also mention is that, and we've seen it in Kenya, just as you said, we still have work to do to improve our technology. For example, at the NSC now we have a different system for trading equities, different one for bonds, different one for on the USP side of things. We would want to see, is it possible to actually have one system that does all this? So, and I think that's one of the lessons, for example, the ESX might take from us, that with hindsight, probably, maybe then it wasn't right, but now I think there's opportunity to actually say, you know what, you don't need fragmented systems. Maybe you just need one system that can do multi-products, and they are there. And it's easier to manage, potentially cheaper, etc. And then the other thing is you absolutely have to work with the brokers themselves. We've found in Kenya, not all brokers are the same. Some have enough capacity to deploy their own applications. Faida Investment is one of them, but there will be others that really, they don't have either balance sheet or even the willingness to invest in serious technology to keep up with what the other participants are doing. So it's good to appreciate that not everyone will want to walk the same technology journey as you might have in place, but for sure the core system, so the trading systems and the linkage to the broker community as far as trading is concerned need to be really solid. And then on the fake news thing, it's also a case in Kenya, and I think other markets as well. Of course, we have functions that deal with market abuse. But the point, I think, is that if you have the right investor education, there's a higher chance that they will evaluate their trading decisions or investment decisions, or they will take professional advice before acting on any information. I don't think there is a space to stop fake news. Everyone is battling with it, and it's getting even more sophisticated. But I think the cure to that is good reporting, of course, timely, but investor education is the bedrock for it. And of course, to drive a culture that wants to actually act on the right information and that is distributed correctly. I'm happy to talk about the few listings. If you'd want me, do you want me to respond to that before you go to it? Yeah? Okay. So about the listings, I think first 70 years, I agree with you, appears to be a very long time. But the reality of it is really 2015 is when you should start counting. Because yes, it started in 1954. That's just before I was born. But before then, the Nairobi, at the time it used to be called the Nairobi Stock Exchange, not the Nairobi Securities Exchange. But the point is, it was really a chapter of the London Securities Exchange. And at the time it was just an association, people trading between themselves, etc. In 2015, when it demutualized and became a company, and then listed itself on its own exchange, one would say that is when you start counting. But I'm not disagreeing that 70 years is a long time. Now the question becomes, why do we have fewer listings? I think the key is to first agree how typically exchanges grow. It's in our end of the world, potentially everywhere else, it starts with typically to start with privatizations, government privatizing existing businesses. That's usually the start. That's what kickstarts it. And then typically as the market matures, you would expect that private businesses then start coming to market. Whether it's because people are trying to list to get more money, to raise capital, or they are listing in order to cash out, to exit, okay? But typically, you wouldn't expect that there would be a lot of those as a security exchange matures. And then usually you start seeing the exchange and the ecosystem working towards structured products. Hence, REITs that my friend Kenneth is talking about, exchange-traded products, derivatives, etc. So what one would expect is that if you ask me about the NSC, we should be saying, how many more listings are we getting from the private market, less so government? How many more structured products are we bringing to the market? On the listing point, if I share our strategy, we want to push a lot more to have private equity funds exit through the NSE. Because we've seen a lot of, at least in Kenya, we've seen a lot of private equity firms and DFIs investing in fairly solid businesses, bring them up to quality so that we can now start having conversations on them exiting through the NSE. So that's the first bit. The second bit is family-owned businesses. In Kenya, we have quite some serious family-owned businesses that are going through generational issues. So the founders, whether the fathers, the mothers, want to hand over the business to the children are not interested. We are now saying, okay, fine, we'll find a way to work with you to get them exited through the exchange, and of course to retain whatever portion the family needs to retain. And we think that we have quite some good, healthy opportunity there. And then the third one is going to be cross listings or dual listings. So where we come and say Safaricom is listed in Kenya, it probably can get listed at the ESX. Similarly, if EthioX, I'm not going to say which one, gets listed here, maybe there's room to get cross listings, and we are doing that with other markets as well. But beyond that, the listings one would expect really is structured products. We want to talk about index. We want to talk about ETFs, which I just mentioned, among other things. I think the other closing point is what we have as is USP, the unquoted securities platform. So we have a lot of businesses that they don't want to get listed in the main market, in the main board, because it has a lot of disclosure requirements, reporting requirements, and of course, you have to cede some control. What they want is to trade more or less, shall I say, among themselves, but in a controlled manner. Now that market, and I actually think it's a huge opportunity even here to grow that market, because that is the future main listing. The source of the future main listings will come from the USP. It enables them to clean up their governance. It enables them to put their house in order, as it were, and more importantly, to get comfortable around disclosures. And then you can then migrate them in time to the larger market. Closing point is, there's a lot of talk, especially in Kenya, around what to do with startups. We have a lot of startups. And Kenya, I think, at least from an Africa perspective, is one of the major hubs as far as startups are concerned, whether it's fintechs, insurtech, etc. The question becomes, most of these have raised money outside Africa, actually, so Silicon Valley and the likes. But there looks to be appetite for local investors to throw $1 or $2 for startups. Now the question is, how do we curate that as the NSE? Because NSE is trusted. How do we enable startups to raise money through the NSE? So that would be a source of new listings. And we actually like the idea, the ESX idea around crowdfunding. And it's something that we're hoping to explore, and we take that and see whether we can apply it to Kenya. So you can see we're also learning from the ESX team. Thank you.
Thank you. I think there was one question to Dagmawit. Can you reflect?
Actually, thank you. So I think most of the work that we wanted to do aligns with the public market, and I think one of the main solutions that the private capital market can actually bring for the public market is building pipeline. And so that's why, and also funding early stage companies. And so that's why we're setting up this catalytic fund. So this will be registered under the Capital Market Authority, under the CIS regulation. So we're setting up a fund, and we're actually looking for a fund manager to start the process. So we're targeting to raise $100 million and start this fund mainly to actually fund, yes, SMEs and startups directly. Around 30% of our funding will go to that, but 70% of our fund will be operating as a fund of fund, investing in new and existing fund managers to come on board. So we want to help build the private capital market, and that's why we will be investing the majority of our funding into building this market and bringing new fund managers to come on board. And I think that is where the majority of the pipeline for future public listings will actually come as well. And so that's what we're currently doing. Thank you.
Kenneth, something that you want to add?
Sorry, so I just want to say, echo what Frank had said around listings and especially around structured markets. I think one of the things we're doing in Kenya is we're putting a concerted effort, especially around REITs, and we're doing this together with Jacob, World Bank Program, IFC, and World Bank. We've started a REIT incubation and toolkit program. I think I won't go into the details of it, but just to say that currently we've got 6 number REITs in that incubation program, and we're looking at least 3 to 4 of those REITs transitioning to listing on the board, and that's the first incubation program for 2024. We have other REITs who are looking to come in the next year, and these REITs are diversified. We've got affordable housing, we've got academia, we've got infrastructure. So I think if what I'm trying to say, I think for ESX, if you look at your structured projects and put a definite concerted effort in some of them, there are people out there who are looking to enable you grow that sector and grow your listings. Thank you.
Good, thank you. I think we have to wrap up on the discussion due to the time limit that we have. You know, the financial instruments that we have in a country is very limited. How the banks are operating only by mobilizing deposit and give it to loan to the customers. And we don't have any other funds that we can utilize it. If there is a capital market where we can raise commercial papers and mobilize fixed income, based on the fixed income mobilized, that can be also one of the source of funds besides to the deposit collection. On the other side, right now many banks, as you notice, there is a challenge of liquidity. But on the other side, we would have large number of funds purchased on treasury bonds. As I've said on a FSR report, it says banks within this short period of time, 65 billion worth of treasury bills have been purchased. If that bill was accessible in a capital market, to discount it, to use it for our liquidity management and so on, we may not face some of the issues or glitches that we are observing. So we are eagerly waiting for ESX. That's why where is the timeline? So October have been marked, and definitely we will wait for that time. I really appreciate our brothers coming from Kenya sharing, since yesterday, sharing your experience, immense experience that we have. We really appreciate it, and this has to continue as a neighboring countries. And Dr. Tilahun and Dagmawit, I really appreciate for your informative discussions that we had. Please, a round of applause to our panelists. Thank you so much.
Thank you very much, Mr. Melaku. You are right. Please join your panelists for a quick picture. Earlier on, he was the one who said, you know what, I could not put this panel with the presenters, and he was right. We would not have been able to enjoy this panel discussion had we not taken the break. So thank you very much for that wonderful panel discussion. Thank you very much. We appreciate you all. Can we have one last round of applause, please? So I'm going to ask just very brief closing remarks. First of all, from our platinum sponsor, the CEO of ET Switch. Please kindly give very warm welcome to Mr. Ilebes Hatis to give us small closing remarks.
Good afternoon again. Right. Ladies and gentlemen, again, good afternoon. And it's a great pleasure and honor to me to come to this stage again for the final closing remark session to say few points. I would like to give you some information about the national switch, so that you can contextualize in your own institution and look for the areas of collaboration that we can work together, as well as you can also leverage the existing infrastructure, products, and services. You know, in the past 2 days, today and yesterday, one of the words that have been repeatedly mentioned was collaboration. And even a competition wasn't that much mentioned. But here, the real company that's established in collaboration and cooperation by competitors who are owned by financial institutes, banks. They compete in their own landscape, but they collaborate when it comes to the national switch. So, and again, this is also a company which can be considered as a PPP model, because there is a collaboration between the government and a private owner, because there are private and government owners. Here we have been established in 2011 for mainly for 5 major goals. 4 of them are primarily given to the national switch. And mainly the first one, which is creating interoperability among financial institutions and various channels. We create interoperability on ATM while the agent level, and I wish for the future also to create interoperability on a branch level. I would like to get the banking service going to branch B, while I don't have any relationship with branch B, but my account and all services is associated with branch A. So I would like to visit once in the future. That will happen, I hope. The second area is the domestic scheme. As you know, the domestic scheme is not only a service, but it's also a security issue, a national security issue. And the third area that we are extremely busy and working on is the payment gateway, where we will enable the e-commerce. And the fourth area, the national switch, we create central interconnectivity for the payments and a clearing and settlement, and finally sending to the RTGS. And the last one, you know, when you work at the back, what we need is shared platforms and infrastructure. So we provide shared platforms and infrastructure. So in our journey, we have been able to launch multiple interoperable products, a payment gateway, and so on. But it was not an easy journey. There were challenges. So one of the major challenges in the ecosystem that we can, because we don't directly engage with consumers and merchants, the major challenge is the readiness of the ecosystem. So we need to further collaborate so that we can enable the consumers really providing the access to finance and the financial inclusion. So everybody, we mentioned access to finance, financial inclusion, and so on, but are we really working on it? Well, I took my own part from the National Digital Payment Strategy and a financial inclusion strategy too. But that will not work unless we collaborate. So I urge the government, financial institutes, media, merchants, and all players to collaborate so that we can achieve the common goals. So finally, I would like to thank everyone who helped us to achieve this position. Mainly the financial institutes, banks, the one who also provide us a support, Bill and Melinda Gates Foundation, Africa Development Bank, the central bank always supports us, enables us, and the payment system operators, payment instrument issuers, and my board of directors, and my energetic team as well. I conclude by extending my appreciation and thank you to these event organizers, partners, sponsors, the moderators, and panelists. Of course, without you, the audiences, this panel wouldn't be lively for the past 2 days. Thus, I thank you very much. Thank you.
Thank you very much, sir. And thank you very much. And now, representing our strategic partners, kindly please welcome Mr. Fasil Gebrezadik, Director of Financial Markets of FSD Ethiopia, to give a brief closing remark. He is online now. He's been waiting for all afternoon. Sir, you have the floor.
Great. Good afternoon, everyone. Apologies, I'm traveling for work, but didn't want to miss a chance to attend a wonderfully organized the 7th East Africa Finance Summit, and my congratulations goes to Dr. Gamechu and his staff and all the wonderful partners and stakeholders that are attending this event. I've managed to listen in quite a bit of yesterday's session as well as today's. It's been very, very enlightening, and we are charting the course and moving forward. Wonderful session, wonderful presentations. Great presence from the Addis Ababa University, which I really like to highlight. The presence of Dr. Samuel Kefle, President, as well as Dr. Jail Omar, who is the Vice President of the Addis Ababa University, which is going autonomous, and there's going to be a lot of innovation that we're expecting from that space. An address from the Governor, Mama Melaku, highlighted the work that is ahead because of the financial sector opening, the establishment of the regulator, the Capital Market Authority, and the launch of the ESX, and also like Ethiopia's admission to BRICS, and also our accession towards the Africa Continental Free Trade Agreement. Governor highlighted the need for price stability and financial stability, and with that, he highlighted also the need for the improving internal capability and organizational capability of the central bank in regards to supervisory capability as well as analytical capability. I've also listened to the president and CEO of Trade and Development Bank, Masika Dessa. He's highlighting the need for action. We've done most of the talking in the need for action. He's talked about also the voluntary capital market, the voluntary carbon markets that we're not taking advantage of, that there's a potential for Africa to move in a climate finance space hugely. I've been listening to some of the discussions in the afternoon. The discussions pretty much on the need for the Addis Ababa University to step up and help develop the professionals that are coming out of the graduates from the university. There is a lot of work that needs to happen. You know, I've heard some of the debates whether the universities produce academicians or practitioners be left for the industry. My sense and my belief is there's going to be a middle way. Yasser Zafu has mentioned about the need for more professionals in the insurance space. There hasn't been any actuary The bankers, President Abisano of the Commercial Bank, highlighted how the chartered bankers are not even existing in that space. And then today also, we've listened to some of the needs that are needed in the capital market space. We're developing the issuers, we're developing the investors, and we're developing the intermediaries. And our friends from Kenya, the chair, Kiprono Kitoni, he emphasized the need for us to have brokers and dealers and market makers that can work not only in Ethiopia, but also in any of the countries in Africa, alongside with the regional integration. We need to develop the human capital, and that cannot be left for any one particular agency or an institution. There's a need to work hand in hand with the university. The university needs to be more focused, needs to deliver programs and educate and graduate students that are readily be able to be accepted into the job market. Because if you see in the West, you will not be able to educate that are not going to be taken into the job market. And I think there's a lot of potential for the university to tap into that opportunity to reform, taking advantage of the autonomous nature right now that is moving forward. The highlight for us is that we need to develop the human capital in the financial market space. We need to develop chartered bankers. We need to develop chartered insurers. We need to develop actuaries. We need to develop broker dealers, market makers, investment bankers, as well as those ones that are working in the institutions like the regulatory bodies, like the Securities Exchange. They are going to be working on compliance, risk management. There's a lot of work that needs to happen. And I think what I would like to say is FSD Ethiopia is keen on supporting, have that conversation with the partners within the banks, insurance, as well as within the capital market ecosystem. And we'll also coordinate this work with the university to make sure the university are at least halfway in exposure that can be assimilated into the workspace. Of our team at FSD Ethiopia, and we'll continue to have the conversation. But I'd like to see that the East Africa Finance Summit evolves from like a 2-day event into a year-round action plan that we all can take an assignment and work on. And by next year we come back, we'll be able to share our stories of progress and that we'll be moving forward in the right direction. So with that, thank you, and I'll pass it back to the moderator.
Thank you very much, Ato Fasil. Can we have a round of applause? You wonderfully took us in a memory lane of the last 2 days. So now it's finally the chance to, representing the organizers of this wonderful summit, kindly please welcome Dr. Gemechu for the final notes.
Yeah. Finally, we are here. Yeah? Silarasa Church of Jovan. Put your hands together. Thank you very much. I think it's been such a journey. Yesterday we opened it, but before, since the beginning, it's getting fascinating. And, organizing, putting together such events, you can simply imagine the challenge of it. But this is a time when you feel like you're doing the right thing, whatever it costs, regardless of the energy you have to spend, the challenges, the work it takes, the amount of distraction from other priorities that you are actually doing, because this is not our major job. This is just we're contributing to the ecosystem. So what I would like to say is, so we are here now, and I'm here to say thank you, but also to share with you what should be the vision of this. Where does it go from here? What should we do as we move forward. So the last 2 days we talked a lot of things, and I'm not going through all those things that we have talked about. But one important thing is, I think the message that the governor passed, I think it's very critical that every one of us get into the between lines and listen to them, because my take is that so much changes are coming, more than what we have witnessed so far, and that could be some of the things we might be struggling with unless we start taking a different perspective. So based on that, we have done a lot of opening discussions, ecosystem, the capital market, the innovation, inclusion, access, so many things have been discussed. And we are here as ecosystem builders. We support, like I said, the vision of this platform, East Africa Finance Summit. As a platform, if you take it, the whole reason is, what inspires us is that we are contributing in the process of building finance sector ecosystem. That's what we are doing. We are contributing our share. Where, like I said in the morning yesterday, if you want to predict the future, the best way to do that is what? Create it. I think that has to resonate in every one of us. Otherwise, we will be the recipient of those who create it. And we don't want to be like that. Whatever we contribute, then we have a share in creating our future. If we don't do that, it would be created in London or New York or DC or wherever, and then we become the takers of that. So that is the whole thing. We are in the enabling of the ecosystem. That's what we are doing. We are creating a platform where every one of us can come together and contribute towards that. It's in the capital market space. It is in the opening up. It is also in the whole regulatory space, in many things. And having said this, the next point is, what do we do next? How do we continue putting this together? Because it has proven its sustainability, isn't it? We have done it for 7 times. It's in fact 9th year. And next year, we're asking, are we going to celebrate 10-year anniversary, or we have to wait until it becomes the 10th East Africa Finance Summit? It's you decide. And how do we let you decide? Mr. Melaku said earlier, he shared this idea with me. It has been our strategy as well. We have to make this platform an independent platform that sustains by itself, so that other platforms also which contribute to the ecosystem building can also come together, and it can become a company by itself, isn't it? Can you agree with me? Is that something agreeable? So that it doesn't depend on iCapital and co-organizers who come on board when we push or when we invite. It rather makes it its own job every year, and 20s, we celebrate 20s East Africa Finance Summit. Probably we do it next time in Nairobi, right? We do it in Nairobi, or it could be in Nigeria, South Africa. It could become that big. So we're thinking, it's a secret that I'm telling you. We're thinking of making this the first listed company. Can we do that? Or something, I don't know what to do with the capital market, or public anyway. We're thinking of making it public in a way that we are the beginners. We started it, we've invested, created the system, whatever. We just want to keep, a small portion of it, and then we want you and everyone, banks, insurances, others, the capital market, ESX. Where's Dr. Tilahun? Also, everybody invests on it. And then, then it can also become a company. NSC and the FIDA investment bank, everybody can invest on it. And imagine the vision. It's not, I'm not just saying, let's just host events. We can push it beyond that and create a platform for African brothers, for the region. We can make it Pan-African Finance Summit. Why not? We can make it even bigger. Think beyond, Think big, that's what they say, isn't it? So, someone is putting hand together? Or did I hear something? Oh, yeah. We're just throwing ideas. What can we do to make sure that it's sustainable, but also it works for everyone, as opposed to when we wake up from sleep, oh, what is going to be the idea that we're going to discuss this year? We don't have to worry about that. We can craft messages in such a way. This is the vision. This is the idea that we are circulating. So think about that. And having said this, I think a very interesting time is coming for Ethiopia and our neighbors as Ethiopia is opening, and that has been discussed. And the thing is, I think the next phase of the economy or whatever is for those who are prepared. It's not, I don't think it's going to be for those of us who are watching from distance and say, criticizing, or for those who are like watching things happening like bystanders. It's for those who jump in and try to do something because there's a lot of opportunity coming into this. With this, so let's keep this momentum. It's growing from time to time. A lot of impressive profiles, including the last 2 days that you have witnessed, is taking part. The topics are maturing. The participations are attracting more partners from the region as well. So let's keep this, and let me say thank you, and let me not keep you more than you have already stayed. So allow me, please, to say thank you for the first important thing is for you participant with a patience, a lot of patience, attending conferences, staying and focusing and listening, and taking notes and internalizing what's being discussed, challenging our own perspectives, trying to get new insights, what is being discussed. It takes a lot of energy and a lot of concentration. So with that, all those of you who stayed persistently and listened and internalized, thinking that, how is this going to affect my business? How is it going to affect my leadership? How is it going to affect my country, my sector, my economy, everything? And I think this, you deserve a greatest thank you and appreciation to yourself. Please, round of applause. Because usually closings are like a lot of putting hands together, isn't it? So, and the next thing is those who trusted in what we actually try to do. From time to time, from year to year, and who wanted, okay, let's help you because we believe in the essence of what we are trying to do and accomplish, and those who said, let's organize this together because we also have something to share and to contribute. Our co-organizers, iCapital Africa Institute, Addis Ababa University, and Ethiopian Association of Ethiopian Insurance, they are very wise, by the way. They have become co-organizers. Fikro is looking at me. They have specific purpose and they know what they want to do. They have successfully utilized this platform. And I appreciate what they're doing. And their commitment is enormous. And for that, they also deserve an appreciation. And as you can see here, our international friends, neighbors, they have left because they have flights, and that's why. Otherwise, I could have called names. But Nairobi Securities Exchange, that tells that this platform is attracting partnership, crossing border, and gradually it's truly becoming, truly East African, because the profile of the people who have come behind them, they have number of members, number of partners, number of customers. So when they go back, the message they pass about Ethiopia is not like an individual is here. They're representing a country, they're representing an institution, and we are very happy, excited to have them on board this year as co-organizers of this summit. Please, for the four of the co-organizers, I told you, it's about putting hands together, didn't I? Wonderful. Our strategic partners. Strategic partners. Who said, even if you don't name us sponsors, give us package whatsoever, we are your strategic partners, even though we don't have specific agenda to drive, but we trust in the vision this gathering is about to deliver. And they are on board. And this year, we have wonderful lineup of strategic partners. We have Ethio Telecom, Telebir, and like I said yesterday, there is a confusion around that. There is a lot of debate, not confusion and concern around it, saying that, are they jumping into the banking and finance sector? Shall we keep them, aside, or welcome them, embrace them? And the whole conversation was about, we can't face the future if we are not together. That was the message, isn't it? So they are the right strategic partners in joining us. And then we have Capital Market Authority guys. I mean, they have that one table reserved for themselves. I don't know why you are coming all together. ASX is mixed, but they have the Capital Market Authority. Johannes, I see you there. But they're very good friends as well. Thank you very much. They sponsor 50 students. Anna, I see you. 50 students. That is amazing perspective. Because the next generation, those who can take the role of leading the finance sector, become the capital market experts. They are the students. And they are the ones that are going to solve the human capital problem. And again, we have FSD, please. FSD Ethiopia, I don't add on that because Fasil already mentioned about what they do in terms of the human capital aspect. And then we have Commercial Bank of Ethiopia. You heard yesterday from himself, from Mr. Abe, the president, and they are this year strategic partner. He did not promise that Bankers Association of Ethiopian Bankers Association will be the next partner. He said maybe, but we have the vice chairman and the vice president in this room right now, and we hold him to account. Please, the CEO of Dashan Bank is here, so he is also the vice president. Do you want to hear what the Bankers Association is going to do next year? Yes? Oh my gosh. He said, I will present the case to the president. The corporate governance. Okay, I don't hold you to account. Okay, good. Thank you very much. I really appreciate. So these are strategic partners. Please, be generous. Thank you very much. A video is capturing everything. If you do not appreciate what has been done, that would be make people sad. Okay, Ipswich, the boss was here. He said what Ipswich is as a national switch interoperability, because we gave him to tell us something about Ipswich, not only because of platinum. Of course, he's a platinum sponsor, but at the same time because the things they are doing in enabling the ecosystem, but they have not promoted themselves as much to be understood by everybody, so that we have a very easy life in our financial transactions, isn't it? You are making our life very easy, so that deserves appreciation too. And thank you very much. Congratulations, 25th anniversary, and the boss was here, and thank you very much. And he also helped us in the panel discussion. He chaired the last session. You heard the presentation, and I don't want to add. And thank you for trusting in what we do. And we have you call it Ethiopian Reinsurance. Fikru, our very good friend, and his momentum, his knowledge, his energy is enormous, because every time we start talking about East Africa finance, the first email we receive from him, and he says, what is the topic this year? What can I contribute? And that's amazing. And Ethioria, and then we have ACCA as our silver sponsor. And is Mike here? Judy, where's Judy? She's not here. Okay, Mike, where is he? Yeah, but ACCA, we have co-organized the last 3 years, I think, together. The next year, that's going to come back. But at the same time, they have joined us as a silver sponsor. So overall, this is a wonderful contribution. We have to recognize them. The reason being, they trusted and they supported, they contributed to what we are doing. Without them, we wouldn't have done it, isn't it? All of us, so that is wonderful, and I would like to say thank you very much. Our friends, I think from Kenya, those of you who have come all the way to be here, some of them have already left because of their flights, but I think they have done an enormous job. We heard from their experience. They told us what they have done, the mistakes they have committed, the things that we don't have to repeat. And I think that's what friends are for, isn't it? That's what friends are for. Please. So this is all that I can say. We will meet next year. And in the Xavier Fakat. In the Xavier Fakat. So we will meet next year. We'll make it even bigger. We believe more participation, more contributions will come next year. So for now, I think we have a closing. We want to take pictures so that we remember when we celebrate the 50s or the 25th year anniversary, isn't it? So thank you very much. Thank you, everyone. This is a long speech as a closing, but I think it was necessary. Yeah. Thank you very much.
Thank you very much, Dr. Gamechu.
One thing that I wanted to do, but I didn't. It was in my mind, I forgot. All iCapital team, please. I want everyone to see you because it's enormous. I cannot tell you how much they suffer to make this possible. It's practically, I wouldn't have done it, imagined it in such a way if it were not for them. You have never seen a team like that. I'm telling you. I'm not flattering. You have never seen a team like this. Who can do, magics. You just tell them your vision, your ideas. Please, iCapital. People should see what young people are able to do, isn't it? Me excluded, because I'm an old guy. Can you see what this generation can do if they share the vision? Where are the rest? Where are? Come on here. This is the team that made it possible, believe it or not. And
imagine the summit was a marathon and every one of you just crossed the finish line. So we would like to invite you all to come join the iCapital team for this wonderful moment and we take the picture. So kindly, please, all join us. We've got at least 3 rows. Those that want to sit, we've got 1 row in the back and 1 with the team. The team, can you kindly come and invite everyone to the stage as well so that they join us as well, please.
Yeah, go ahead.
Please.
The CEOs and the leaders, please take the lead, guide us.
Please.
And then
Thank you very much for staying with us until the end.
Please, all of you.